Hey friends, Lucian here with the Bullish Bears team. Wanted to make this video on the best day trading system. So right off the bat, if you're new, not to sound discouraging, but I'm going to just tell you up front, there is no magic system when it comes to day trading. So there's lots of gurus and lots of companies out there that are trading companies that'll act like they have the magic formula. But unfortunately, there is no magic system when it comes to day trading. There are some very helpful things that I will kind of go over with you, but there's not going to be some, magic indicator or some service out there that you could just follow someone's alerts and just get rich, right? So there's a lot of stuff in the industry that a lot of the the gurus and the companies don't really talk about, things such as pumping and dumping. A lot of times you'll see these companies out there that say, hey, follow me, or they'll put thumbnails on YouTube showing you how much money you make, or that they're making, $10,000, $20,000 days. And that kind of suckers in a lot of the new traders because they think, oh, wow, if this guy can do it, I could do it too, right? And the thing what a lot of people don't realize is that these gurus or trading companies, they have many times big brokerage accounts, right? So they have a lot of money in their account. However, they also have a large following, right? So when you have a large following, they can say, hey, don't follow me or copy my trades. That's called mirror trading. You want to be very careful mirror trading. So don't, especially if you're new, don't follow some trading guru because they're supposedly making lots of money, because you have to remember many of these people have a decent sized following and they get a position before their followers. So if they get in 5 seconds, 10 seconds, even a second before you, they have an existing position, right? So they're getting in before you. Then they call out their position, and what happens is their followers start to rush into the position after them, right? So if they're getting their position in sooner, right, they're not chasing to get in a position. Their followers come in, and that creates a lot of volume for the stock, and then the volume starts to hit the scanners, and other people start coming in, right? So this can all happen within the matter of seconds. Now, the thing is, if I have an earlier position to you and you buy after me, you're chasing while I'm already in my position. Now, when I go to sell my stock, if you don't know when I sell it, I'm selling before you as well, right? So I'm getting in before you and I'm selling before you. And if I have a larger following, again, this can control stocks, especially with low float stocks. So the float of a stock, typically with day trading or trading penny stocks, many of the traders around the world, they're trading more of the lower float stocks. Those are the ones that pump and dump pretty quickly and have the big volatility. Now, float is basically the number of shares of a particular stock that are available to trade. So if somebody has, if a company doesn't have that many, only 1 million or 2 million or 10 million shares, let's say, to be traded, compared to a company that has 100+ million, it means the supply is not as much. So if you have a lower supply and a high demand, that's what creates that volatility. So if you have a higher float stock that has lots of shares to be traded, it's not going to be as volatile as those lower floats. So if I get my position before you on a lower float stock and you come in after me, that thing can pump up within seconds and I can dump my shares. And many a times you'll see these companies and they don't know, right? You don't know who you're selling your shares to. So, these trading companies, a lot of them that brag about how well they do, they might have existing positions. Their followers come in, they sell their shares. Now, if this trading guru has a $100,000, $200,000 brokerage account and their followers only have a $5,000 brokerage account, it's easier for the guru to buy 10,000 shares, make 10 cents on a trade, make $1,000 in that trade, and meanwhile their followers come in after them as they're dumping up the top. They're dumping their shares up top. So they're buying low and selling high, whereas new followers, they don't know what they're doing, and many times they'll end up buying at tops, right? So they're buying high, and then the stock dumps down and falls low. So I explain this to you, especially if you're new, because this is the game to a lot of the day trading world. Again, it's not technically, it's not illegal, but it's what's happening out there. It's a very dog eat dog world. Not saying to not day trade, but you have to be aware of that when you're finding a company or somebody to follow. You have to learn the skill sets on how to become a proper day trader, not go somewhere to think you're going to find some magic system or magic indicator, because there isn't one. Now, a lot of traders will come in and they'll think, let's load up my charts with indicators. Indicators are important and they're very helpful, but they're not foolproof. And you have to remember that many indicators are lagging. They're not up to date. And a lot of times, if you have too many indicators on your chart, it could cloud your vision or seeing what's going on, and you can become too reliant on indicators many times. And that's why you want to be very careful. We'd argue that price action or candlesticks and volume are the most important indicators. So you can use things like moving average lines, which are helpful. They're really helpful guides for support and resistance levels. Some very popular, moving average lines when day trading are the 9 and the 20 EMA or the 13 EMA. If you use the 9 and the 20, you don't really need the 13 EMA. Some people like the 13, and then others like the 9 or the 20. And then popular simple moving average lines, or SMAs. So EMA is exponential moving average, and SMA is simple moving average. The most popular ones are the 50, 100, and 200 SMAs. Now, VWAP is also another very important or popular indicator. It's an intraday or day trading indicator. Again, many people will use it for swing trading and stuff as well, but it shows the equilibrium level of the stock intraday. So it's a really good support and resistance level. So when you're day trading too, you want to kind of put this all together, and you need a good scanner, right? So you're a hunter of volatility, you're a hunter of volume. You want highly liquid stocks to be able to get in and out of. So when you're day trading, you're not looking to hit home runs. You're looking to do your scalps, your 10, 15, 20 cents. A couple times a month you might hit some home runs, but you grow your account by those little moves each day, 10, 15, 20 cents. And to find those stocks, you need a good scanner. We highly recommend Trade Ideas. We feel like they're the best scanner that's out there. You can customize it to the the windows that you want, hunt for, float, short float, news, all that good stuff. So Trade Ideas, again, you want to have a good scanner to find these plays, these highly liquid plays. And then you need to know, again, putting it together, learning price action, volume, and kind of putting that whole thing together. So again, there's not a magic system. Actually, the magic system is good old hard work. That's the key. So next up, let's just talk about some trading rules when you're day trading that are kind of some guides to follow. It's easy. I'd argue this. It's kind of like, I'd put it into two categories. There's learning the technicals and actually just learning day trading, and then controlling your emotions. I'd argue that controlling your emotions is harder than learning the actual technicals. Like with anything in life or any skill, you can learn something. You can go to college and learn to become a doctor, electrician, a plumber, veterinarian, whatever it is. You can learn the skill set, but can you do it in the real world? Can you operate on a person? Can you operate on a pet? How are your emotions after you get that schooling and then you go to use real world education and put it into play? It's like that with day trading or trading in general. It's one side of the fence is learning what to do, and the other side of the coin is being able to implement it. And I'd argue that most traders fail not because they don't know the technical knowledge, it's because their emotions cloud them. So it's very important to be able to learn how to control your emotions when trading. So as far as some of the day trading rules, the PDT rule is one of the most important rules to understand. It's pattern day trading rule. Basically means if you want to be able to do unlimited day trades every day, you need at least $25,000 in a brokerage account, or that means you can only make, if you have less than 25,000, you can only make 3 day trades within a five calendar day period. There are some brokers and ways to get around that. Again, there's, brokers like CMEG that you can use that can get around that. But before you go jumping into a broker to avoid the PDT rule, it's important to learn how to trade first. Now, a lot of new traders will go and jump into those no PDT brokers, blow up their accounts because they don't know how to trade. And that's the key, is you have to know how to trade first before you go to one of those no PDT brokers. Now, what constitutes a day trade is buying and selling a stock within the same day. That's considered a day trade. I know these will sound like some basic rules, but they're very important. You need to plan your entries and exits before each trade. And that's why mirror trading and copying other traders is not a good thing. It is good, though, if you're new. If you join a trading company or follow a guru, if you're practicing in a virtual account, it is good to follow them and practice to see how it works if you're doing a virtual account, right? So if you're shadowing or mirror trading somebody and you're following them, practice in a virtual account what they're doing. That's okay, right? But when you're going to trade with real money, you have to know how to do it yourself. There's other things like margin requirements, or companies that allow you to use margin. Don't trade on margin, because that could really put yourself in a very deep position. So just because you have the ability to trade larger than what you have in your account, don't do it. Don't do it unless you absolutely know what the heck you're doing, because that's a great way to just blow up your account and really get yourself in trouble. So again, you definitely want to practice in a virtual account. Make hundreds of trades. Track your trades. Make sure you become, successful doing, 60 to 65% of the time, on your trades. You are going to fail. There's many of times, again, the best traders in the world still fail 30, 40% of the time, but they keep their losses small. So their winners are much bigger than their losers. They keep their losses small, and they cut their losses, right? So if a trade goes against them, they cut their losses. They stick to their plan, right? They don't just, hope and pray that the stock is going to go up if it goes against them, because trades go against you all the time. You're trading against real people as well as computers. Many times you're trading against algorithms or computers that are not emotional. Right? We as human beings are emotional. So if you're trading against computers that don't have emotions, they can control movements of a stock. So these high frequency computers that don't have the emotions know the emotions of other traders, and they have these algorithms to kind of, that's how they get, again, it's much different to trade when you're trading with real emotions than if you're a computer, right? So that's where it's important to understand, and that's why you want to put it all together and have your trading plan ahead of time and knowing your entries and exits, because at any time, anything can go against you, right? So that's why practicing in a virtual account first is very important. Then you want to slowly scale your way up using real money. Don't trade with real money first, do virtual, and then slowly scale your way up with real money. So sticking to your trading rules, I can't stress it enough. And then just kind of another one is just don't get too greedy, right? You'll always, there are many a times, sell too soon, right? But we always say you can't go broke taking a profit, right? So, if you make money, it's better than losing money. And there'll be so many times that you'll sell too soon and kick yourself and say, oh man, that stock just ripped, it just kept going up. But that's okay. It happens all the time when day trading or just trading in general. So if you're new to the stock market, again, this is kind of like a highlighted overview on the best, day trading system. Again, there isn't a perfect one, but we teach you a lot of the skill sets in our community on how to learn day trading. Again, we're not going to tell you what to buy. We're going to teach you how to trade. So that's what our trading community does. We have lots of courses on our website. We have day trading, swing trading, options, futures, all that good stuff. So if you want to learn more, you can take our courses by heading to bullishbears.com. The link will be below. And as always, if you like this video, we would greatly appreciate it if you subscribe to our channel, give us a like on this video, and feel free to share it out to others. Again, we're always trying to help others to become good traders. So hopefully this video helped you, and we will see you in our community. Enjoy.